Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it has been a fairly choppy day for the market. The Nifty, although has been trading in a narrow 100-point range, we did see spurts of buying emerging as well. As of now, the Nifty is just about 5 to 6 points lower, but we did, attempt to reclaim that 26,000 mark, although didn't really succeed there. The mid-cap index is also moving mostly in tandem but slightly underperforming the benchmarks. But the good part is that the advanced decline ratio has improved slightly, although it's still skewed in favor of laggards, but it isn't as bad as it was in the morning. But if you look at the Nifty Bank index, that has staged a very good 300-point recovery from the day's low. The Nifty Bank index in recent times has been underperforming. I think in the last 3 weeks, we've seen the Nifty Bank index handing in weekly losses and underperforming the benchmarks. But today, it has managed to stage a good rebound and 300-point, 350-point recovery from the day's low. In fact, trading well above that 59,100 mark as we speak. In terms of other sectors as well, metals are back in vogue. Of course, yesterday it was a breather given the fact that global prices were swinging quite wildly. But today, some buying coming in after a 15% crash in silver prices. So, metals have kind of regained the shine that they lost for a day. PSU banks, another sector that's doing well, 2% gains coming in on PSU banks. Autos as well, after a slow start, they've managed to stage a good recovery. In fact, 1.5% gain on the Nifty Auto Index. But what's not doing well? IT. Fifth straight day of losses. Although in the last 3 months we've seen good gains, good recovery coming in for IT, but off late, 5 straight day of losses for the IT pack. So yes, some bit of selling pressure. Real estate badgered, out of shape. If you look at the YTD performance among the top sectoral laggards, no respite. Year-end buying not coming in as well. Nifty Real Estate Index down 1%. FMCG that saw some buying yesterday is down once again, 0.3% kind of loss there, and pharma index is also in the red. In terms of some of the individual movers, Shriram Finance on the back of a rating upgrade, the stock is up 2.5%. Some steel names like Tata Steel, JSW Steel are finding favor. Hindalco also among the top Nifty gainers, 2.5% gain on the Nifty Metal Index. So yes, that's of course why you are seeing some of those gainers from the metal universe. Axis Bank, SBI from the banking lot, doing well. Tata Motors passenger vehicles. Since morning, that stock has been doing well. Maruti Suzuki also among the gainers. Adani Twins also, seeing good buying interest. And L&T and Sun Pharma are the other gainers. On the flip side, Max Healthcare, that's the top laggard, 2% down. Eternal, CFO of Blinkit may have quit. I think that's why the stock is down, and it's down 2%. Yesterday it had a good session yesterday, but of course succumbing to some bit of news flow there. Infosys, Tata Consumer, Eicher Motors, HCL Tech, SBI Life, these are some of the other movers I can see on the downside. And Interglobe Aviation back in the red. It has lost some bit of market share thanks to the disruption that we saw, on the flight departure schedules and, flight schedules rather, just a few days back. So yes, that's also one reason why Interglobe is back in the red. But yes, all in all, of course, the cheer is missing, the year-end cheer, so to say, missing. We started the week on a subdued note. Today, no big losses, but still, we are still in the red, and we are just trying to edge back into the green, but bulls not really being able to succeed there. But to understand the trajectory going forward, what should one look forward for in 2026? It's the penultimate trading session, and just one more session to go. But joining me, to understand the market setup is Gaurang Shah, Senior Vice President, Geojit Financial Services. Gaurang, lovely chatting with you. As I was mentioning, penultimate trading day, and of course also happens to be the F&O expiry, monthly F&O expiry on the Nifty. No cheer. Of course, it has been a fairly volatile day. The year has been fairly volatile. From 21,700 levels, we've hit a record high. Then again, we're consolidating. Just about 9 to 9.5% gain on the headline indices. Compare it with the likes of South Korean markets, and it's actually nothing. So how are you feeling about how the year has been, and what are your thoughts about the rest of the or the brand new year going forward?
Thank you so much, Nandita, for having me on this show. Good afternoon to you and to all your viewers. Small disclosure because we might talk stock specific as well, that all recommendations that I'll be sharing with you on the show, they are part of our research team long-term recommendations. Our company, Jiyojit or I, we do not have any personal investment, no financial interest, no conflict of interest, but we give similar advice to our clients. They might have their investment interest. So, you know, Nandita, honestly, I think we have done fairly well despite of the kind of headwinds that we had to face, especially in the first half of calendar 2025, post 2nd of April, announcement made by President Trump with respect to tariff, and of course thereafter the kind of geopolitical situation that evolved, etc., etc. Higher single-digit return in this kind of a scenario on Sensex and Nifty, I think we are better off. For 2026, our sense at Geojit is that we should possibly, on a conservative side, Nandita, in terms of index return, Sensex Nifty 12 to 15% is what our anticipation is, given the drawback and the events which are unfolding and likely possibility of some resolution. So that's the kind of return we expect from Sensex and Nifty in 2026. Stock specific, sector specific. In this year also, we got some very good return, and we expect these returns to even better in terms of sectorial and stock specific performance. We'll have a lot of clarity as we go into the year 2026. First of all, from 10th of January, we'll have the curtain raiser, I believe, for the third quarter. Then we'll have the budget. In between, if there is a little bit of more clarification in terms of trade agreement between India and US, that will add to a tailwind positive. But having said that, Nandita, I think we've been successfully able to reduce our dependency and sign BTAs and FTAs with other countries. And that will open up newer avenues for us. In terms of GDP, interest rates, inflation, etc., we are fairly better than the rest of the world, especially in the emerging market basket. And with respect to FI flows, I think possibly wisdom will prevail upon them and they'll start looking at India as a destination for investment. It won't happen immediately, but in a staggered way.
Okay, those are some of the factors that should be watched out for, and of course, 12 to 15% kind of returns on an index level could be expected in 2026. But let's break it down to sectors. I want to talk about the PSU lot in particular. After four consecutive years of double-digit gains, the Nifty PSC index is up barely 3% this year. Now, the index had seen a record 80% surge in 2023. So, what is in store for some of these PSU stocks? Rail stocks have had a forgettable year, although last 1 month we've seen some traction. So is the case with power companies and power financiers as well. Uh, After 4 years of solid gains and a year of consolidation, how should one approach this space? Do you think it's ripe for a resurrection in 2026?
So I think, yeah, that's an interesting question, Nandita. So you have a lot of PSU companies in different sectors, especially with defense. We have some PSU banking names which have performed quite well despite of the headwinds that we were facing in 2025. Then you have the oil marketing companies, oil exploration companies, cap goods engineering companies. In mining also we have some decent names which have been doing quite good. So our sense is that amongst these entire universe of PSUs that I've just listed down for you, defense and PSU banks, they will possibly lead the performance wise from ahead. If crude oil stays below 60 Brent and somewhere around 55 NYMEX, then I think your oil marketing companies should also start throwing in a little bit of more contribution. And in the mining space or in the power generation space, you will have a little bit of more positivity. So, while we expect the PSU companies to perform, but within that PSU universe, you have to break it up sectorially and look at PSU companies depending upon their earnings visibility and order book.
Sure. Of course, PSU banks are not a part of, it was not a part of this question because that index, the PSU bank index in particular, has rallied, I think, in excess of 25 to 26% for the year. Within PSU banking pack, would you prefer the larger ones like SBI or would you look at the mid-cap ones? The likes of Canara Bank, Federal Bank particularly have done fairly well.
So let me first list down the names that we have fundamental coverage on the buy side. State Bank of India, Indian Bank, Canara Bank, PNB, Bank of Baroda, Bank of India. These are the names on which our fundamentals the team is positive from a long-term point of view. We also had a statement some months back or some weeks back that there is going to be a further consolidation of smaller PSU banks into larger banks. And eventually, I read a report, Nandita, that we'll have four strong PSU banks after all these, merger processes over. So smaller banks, the other problem, Nandita, is consistency in delivery as far as earning is concerned. Out of 4 quarters, you will have 1 or 2 quarters which are extremely, extremely good, and the remaining quarters they are equally disappointing. So consistency in delivery is something that is a little bit of tricky situation smaller PSU banks are going through. But once this further consolidation is done and dusted, I think we should have a better picture.
Okay, all right, got your point. Of course, the whole PSU consolidation is something that one should watch out for, and of course, we'll have four big banks as Gaurang was also pointing out. Of course, they will unfold as time goes by, but we'll have to wait and watch. But talk about railways in particular. Typically ahead of budget, you see, improving win ratios, for some of these names, right? Last 1 month, we've seen some of these stocks picking up speed. Ahead of the budget, do you think tactically it's a good proposition now, railway stocks, given the fact that they have seen a sizable correction already this year?
So, Nandita, I think, now it's a very different picture for the railways related stocks. There is a consistent policy in place and there is a lot of infrastructure creation for the Indian railways. Having said that, there is always this pre-budget anticipated rally in the railway stocks, including fertilizer stocks, if I can extend that argument further. And then it kind of fizzles off. But now the kind of, the change in Indian railways that the government and the Ministry of Railways is planning, I think this big problem for Indian Railway and the minister also addressed it was the last mile connectivity. For the next 3 to 5 years, I think we are going to see major changes coming through in the Indian Railways. And within that, I think whichever fundamental strong company, whether it is a PSU or a private player, will have its contribution coming through in terms of orders and executing the orders and then translating into revenues and profitability improvement. Unfortunately, we don't have any stock specific recommendations in the railway sector. I won't be able to give you any specific names, but there are some strong names. These are not recommendations. So you have names like IRCTC, you have names like Titagar Wagon, you have Jupiter Wagon, you have RVNL, IRFC, Railtel. These are some names which have been in the spotlight for all the good reasons.
Okay, all right. Let's shift gears and talk about IT as well. Last 3 months, if you see the 3 month returns, we've seen a good recovery come by. Obviously, if you look at the YTD picture, it's starkly different. But, off late, once again, IT is in the throes of a sell-off, 5 straight days of weakness. But a lot has been happening in the sector as well, right? TCS recently quantified its AI business or AI revenues for the first time. It said AI revenues are actually growing faster than overall revenues as well. And on the other hand, the AI battleground is also heating up. You had Coforge's acquisition of Encora. That is being termed as a big, bold bet by the street, right? What did you make of it? Do you think it's a very pricey acquisition and, EPS accretion would be still some time away, although the company believes it will be EPS accretive from day one? Would you concur with that? And tell me, for the IT landscape, given the kind of acquisition we've seen, the deal that we have seen between Coforge and Encora, do you think AI and cloud investments would define IT spending in 2026? Because till now, Indian companies haven't really been spending that much in AI anyway. But going forward, would that happen, especially after this deal?
So our sense, first of all, as a disclosure, we've been positive on IT even when the going was tough for IT sector, especially post tariff announcement and certain statements made by President Trump. We remain positive then, we remain positive now, and will remain positive going into the future. There was a lot of apprehension in terms of IT companies' second quarter earnings being much below what the street estimates were. But it happened otherwise, right, Nandita? They were much better than what the street estimated. Post the Q2 earnings, most of the frontline and some strong mid-cap company management did come out and give a verbatim that they are looking at AI They are looking at data center. They are willing to invest, whether it is going to be in backward or a forward integration. And let me say one thing over here, Nandita, that if you want to sustain your growth with acquisition of companies, then you have to look at such companies which will contribute to your balance sheet and grow your platforms to the next level and improve your earnings visibility. With this argument, if there is an acquisition which is in the short to medium term looking expensive according to some, so be it. I think we should leave it to the wisdom of the management with such acquisitions, and they would definitely have great amount of confidence in doing such acquisitions, and that will contribute to the balance sheet. So while we are at a very nascent stage compared to US and China where AI is or data center is, I think the beginning should be in a calculated manner and step by step. We should not rush into it because that may lead to a little bit of ugly situation. How we have recently seen in China and US, what happened to those tech giants, stroke AI companies, stroke data center companies. So we remain optimistic, and I think calculated risk should be taken when it comes to acquisitions.
Okay, we remain optimistic on IT. Of course, this deal, the much talked about largest IT deal, of course, could perhaps redefine the IT landscape in 2026 as well. But Gaurang, paucity of time, but would like to understand what are your top recommendations for 2026? Any particular stocks that one should watch out for with a 12-month horizon?
Yeah, so three names that immediately comes to my mind. I mean, we talked about defense from the beginning of the show. So, a government PSU company called Bharat Electronics Limited, BEL, we are month-on-month numbers very soon. Positive on a commercial vehicle play called Ashok Leyland, and new age technology stroke delivery, platform delivery, Eternal, earlier known as Zomato. We've been positive on all these three from a long-term point of view.
All right, bullish on all these three stocks, BEL, Ashok Leyland and Eternal. Of course, all the target prices were also flashing on your screen. But with that, Gaurang, would like to thank you. It's always a pleasure chatting with you, and I always enjoy our chats. Your perspective really matters to us, and look forward to many, many more interactions in 2026. Wishing you a very, very happy and prosperous new year, and hope it's a profitable one. And to you, your family, and your entire team, from the entire team of Moneycontrol, a very, very happy new year in advance.
Always wonderful, Nandita, having this interaction with you, and I look forward for such interactions many more in the new year. Likewise, wishing you, your entire team and your family a very happy and a prosperous and a healthy 2026.
Thank you, Gaurang. Always a pleasure. Thanks a lot. Well, then on that note, before we bring on our next guest, let's take a look at what the markets are doing. They're actually doing literally nothing. 25,950, we are around about that level, oscillating between gains and losses. Very, very, meager kind of, gains if you compare to yesterday's close. It was a fairly volatile day, but the Nifty was fairly range bound in that 100-point range. The Sensex as well, down just about 9 points. Mid-cap index slightly, underperforming the benchmarks, down just about 0.1%. Small cap index also down almost 0.2%. Advanced decline ratio, although it has improved, but it's still skewed in favor of the laggards. 1250 advances to 1677 declines. And as I was mentioning, the Nifty Bank index is only picking up further speed. It's up somewhere around almost 250 to 280 points. 59,200 is back on the charts for the Nifty Bank index. Take a look at some of the top movers in the broader end of the markets. Let's see what are the top gainers on the Nifty 500 index. Hindustan Copper, it's up 10%. Of course, yesterday it came off or cooled off from the day's high after all the global metal prices saw correction. But today, once again, some of those metal prices have rebounded, and which is why we are seeing shares of Hindustan Copper, rallying another 10%. I think it has hit a fresh 52-week high. No, it's up somewhere around 10%, but not really in that 52-week high list. But aside of that, you have Indian Overseas Bank, Force Motors, SAIL, Nalco, all of these metal names also doing well. Navin Fluorine is also among the gainers. On the flip side, if you look at the top laggards, PTC Industries, Lloyds Metals, Kaplan Point and Intellect Design, these are among the top laggards on the Nifty 500 index. But on that note, just about 3 odd minutes to go for the markets to close. Let's bring on board Osho Krishan, Senior Analyst, Technical and Derivative Research at Angel One. Osho, very, very lackluster day, 100-point range. It was the final FNO expiry on the Nifty for 2025. What's your sense? Of course, we started the week on the back foot. But do you think, given the fact that we have cut down some of those losses, 31st December, tomorrow, perhaps that could be a day when we see green on the screen? Is that a possibility?
Very good afternoon, Nandita. Firstly, thank you for having me at the show. Well, yes, no doubt for traders, today's market was quite lackluster. There was very less opportunity considering the last expiry week for the calendar year. But overall, I am expecting that as we have seen a kind of a bounce from the 100-day 50-day exponential moving average on the daily time frame chart, so there might be a possibility of reversal in the coming period. Overall, it is because of short covering that we have seen in today's trading session, especially after 3 consecutive sessions of selling pressure in the market. We have seen some kind of positive traction coming back, but that should be considered short covering. So I will wait for another day. A close above the zone of 26,080 on the spot levels will be considered healthy for the market, and from there onwards we can expect a kind of a positive momentum to continue. So I will be waiting for another 80 to 100 odd points on the Nifty to get closed on, and then we can be witnessing a positive momentum or a bullish setup can be seen in the coming calendar year.
Okay, got your point. But what about the Nifty Bank Index? It has staged a very good comeback, 59,200 back on the charts, 350-point recovery from the day's low. Of late, we've seen the Nifty Bank underperforming the benchmarks. Has anything changed, or is it just a flash in the pan?
See, again, it's like it has been into a very strong consolidation or lackluster session from past 3 weeks. So Bank Nifty was having a very strong support around the zone of 58,800, while on the higher end, again, a very strong resistance is placed around 59,400. So this is the range for Bank Nifty. No doubt in last 30 or 40 odd minutes, there has been a decent traction in Bank Nifty, but that is based on the expiry trade. Although on the higher end, I will be waiting again for 59,500 to get closed. And then from there onwards, we can see some kind of momentum, positive momentum coming back in Bank Nifty as well. So overall, both the counters are into a kind of a consolidation phase, and one should wait for a decisive up move before the bullish momentum should continue in both the key indices.
Okay, wait for a decisive move. Hold that thought, Osho. 3:30 on the clock. This session has ended, so to say, and we have ended in the green. 25,969, that's where we are, 25,970, you can say that. Almost a 28-point uptick on the index. So at least we have managed to shut shop, with green on the screen. The Sensex up 100 points, 84,798. Mid-cap index, in fact, that index also managed to edge back into the green in the dying hours of trade, or dying minutes of trade rather. 60,000 back on the charts for the Nifty mid-cap index. Breadth, of course, skewed in favor of laggards, but still much better than how we started the day. The Nifty Bank Index up 0.5%. Of course, as Osho pointed out, we have to wait for any kind of a decisive move to really see whether the bullish momentum is back. But, I think the last tick is showing that the Nifty actually ended the day in the red, by 4 points or so. 25,940, that's what is showing up on my screen. And even the Nifty mid-cap index, slight underperformance coming in there, 59,914. That's where the Nifty mid-cap index is at. Sectorally, as I mentioned, metals have staged a very good comeback. Mind you, all the sectors at the start of the session were trading in the red. So from there, we had metals staging a very good comeback, 2% up on the Nifty Metal Index. PSU banks a close second, 1.7% kind of an up move on the Nifty PSU Bank Index. Autos also picked up speed. The start was fairly slow for the auto pack. In fact, autos have also being seen some bit of consolidation. But today, a good day, 1% move. Of course, on the 1st of January, we'll be watching out for the auto sales figures for the month of December, and the expectation is that passenger vehicles and four-wheelers will be doing better than the two-wheeler pack. So yes, that's one data point that will be in focus. The Nifty Bank Index, as I mentioned, gaining 0.5%. On the flip side, real estate and IT, the top two laggards. IT down for a 5th straight day. FMCG also down today after yesterday's positive moves. Pharma was also in the red. In terms of the individual movers, Shriram Finance top gainer 2.5% gain. Some metal names Hindalco, Tata Steel, JSW Steel, these were among the gainers. Although you also see Axis Bank on the gainers list. From the auto basket, Bajaj Auto, Tata Motors, Passenger Vehicles, Maruti, these were some of the gainers. And from the PSU banking lot, SBI is among the gainers, and Adani Twins also doing well in today's session. On the flip side, IT names, HCL Tech, Infosys, all of them under pressure. ITC under pressure. Asian Paints, that was a gainer yesterday, under pressure today. SBI Life, Apollo Hospital, Max Healthcare, Eternal, of course, on the back of news flow, that stock is also down. And Coal India is the other one that's under pressure. But let's talk about Shriram Finance. Good gains coming in there, of course, triggered by the rating upgrade that came by from CARE. They have upgraded the rating to AAA from AA plus. And of course, in terms of the brokerage note, there is a Morgan Stanley note wherein they have said that they are positive on the stock and overweight rather, and target price is at 925 rupees per share. In fact, the management has also said that the cost of funds will come down by as much as 100 basis points over the next 1.5 to 2 years as a result of the upgrade. Shriram Finance, the stock has seen very good traction. If you look at the YTD moves, I think 60-70% kind of gains. How would you look at this stock? Would you consider getting into this stock at these levels, or should one wait it out for some kind of a cool off to come by?
At present levels, the counter is very overheated. The technical parameters are extremely overstretched on the daily and weekly time frame chart structure, although the momentum still prevails. So it will be advisable to hold the counter for those who are already having positions in this space. Then they can hold the counter with 945 or 940 as a stop loss. I'm expecting nearly 990 to 1000 to be seen as immediate target, but one should wait for a decent profit booking or cool off in this counter. Overall, the strong support or a strong breakout zone, which was near about 880, should be retested, and that should be seen as a buying opportunity from short to medium term perspective. But for now, only for those who are holding position, it will be advisable to hold it with 940 as a stop loss.
Okay, stock of course looking overheated, that's the call. But let's talk about another pocket that was really buzzing. Talking about textiles, there was a report from Avendus on home textile. Stocks like Indocount and Wellspun Living, they really took off, post 1 o'clock. Any thoughts? Is it any kind of technical level that you'll be watching out for on the upside here? Any zones that have been broken out? What are you making of these moves?
Firstly, today is a kind of a very strong move. No doubt there has been a strong traction in terms of volume in majority of the textile company. ICIL has seen a decent momentum in today's trading session, but overall the technical structure remains on the sideways to negative side. So overall, one should wait for a follow-up buying interest. If it happens and once it crosses the zone of nearly 315 to 320 on a decisive and closing manner, then from there onwards we can expect some kind of breather or positive trend coming forward. So one should wait for a momentum breakout and then should look for buying opportunity in this counter. Till that time, one should definitely keep this on the radar list. If there will be a breakout, then one can expect a decent counter trend in this counter from a medium to long term perspective.
Okay, wait for follow through buying to come in. Of course, today we saw strong moves on the shares of Indocount as well as Wellspun Living. But talk about the new age basket as well, particularly Eternal. Shares hit a 5-month low today. The CEO of CFO rather of Blinkit has resigned. The stock has been under consolidation in a corrective phase. Yesterday we saw a good buying interest coming in, but any level on the downside that you'll be watching out for here? Do you expect more pressure to come through? Do you expect the consolidation phase to extend? How would you look at Eternal? And if you compare it with the Swiggy, over the last month at least, Swiggy has done much better or outperformed Eternal in terms of its returns. So how would you look at both these stocks?
Firstly for Eternal, the counter have seen a very strong momentum in the recent period in the previous quarter, but in the recent period there has been some kind of profit booking that has been definitely been there in the counter. Technically, now it has plunged below the 200-day exponential moving average. So I'm expecting that from current levels, the outlook looks bleak on a very short-term time frame. Although the support zone is approximately placed around the zone of 255 to 260. So one should wait for those levels to get retested. Once it retests the zone of 260, then there will be an opportunity to start accumulating eternal. Overall, I'm still having a bullish view, but one should wait for a decent correction or a healthy correction in eternal. While comparatively to Swiggy, yes, no doubt the counter have seen a higher momentum or less fall in this in the shorter time span, but overall the technical structure for eternal is quite positive rather than Swiggy. For Swiggy, one should wait for a breakout above 420 and then only one can look for buying opportunity in Swiggy.
Okay, that's about Eternal and Swiggy. 400 level on Swiggy is crucial. But talk about Indigo as well. The airline did see a market share loss, and of course, it has also hiked its pilot allowance. We all are aware of the kind of disruption that the airline faced, and the stock was also in a downward spiral. But off late, we did see some buying interest returning. But as I mentioned, the November data showed that there has been a fair bit of market share loss as well. So here on, what is the trajectory looking like for the stock? 5,000, it's managed to hold on to that level. But any level on the downside that one should keep as a stop loss when trading in this counter?
See, overall, it's being very volatile month for Indigo, and currently it is still into a volatility phase. So I expect that one should stay sidelines from the counter. Although on the technical front, 4,800 is a very strong support zone. So if in the recent period we have seen a decent bounce from the zone of 4,800, and the same could be seen in the coming period. So one should wait for a consolidation around the zone of 4,800 and then can look for buying opportunity in Indigo. But in shorter term time span, there is volatility and one should be very much cautious. For traders, it will be advisable to keep a stop loss below the zone of 4,800. So that should be around 4,750 will be the advisable stop loss. But I expect that there might be some kind of gradual move or consolidation that can be taken place in the counter, and then one should look for buying opportunity, but from medium to long term perspective, not from a shorter time span.
Okay, all right, got your point. Keep a medium to a longer term horizon when it comes to Indigo. Of course, short time things have been very volatile, and we'll have to see how things unfold going forward from here as well. But some volume buzzers that I want to draw your attention to in today's session. KPI Green Energy. This stock snapped out of a 2-day losing streak. In fact, it saw its biggest single day gain since the month of May. But the stock still, I think, remains below its key moving averages, and it's down somewhere around 20% in 2025 so far. In fact, interesting data point that the company is also set, or the stock is also set for its first negative year after listing in 2019. How would you approach this stock, KPI Green, and what are the charts telling you?
See, overall, this year has not done much on the technical front for the counter. The counter has been hovering in a broader range of nearly 400 to 500 odd levels. But I expect that with the kind of momentum after a very elongated period of consolidation the counter have witnessed, one should wait for a follow-up buying emergence. If it happens, then from here onwards, one may look for buying opportunity in the counter. On the higher end, near about 510, 520, still has a very strong resistance zone. But once it breaches the zone of 520, then from there onwards, we can expect a bullish momentum to continue. So for shorter term duration, a buying emergence should occur for the target price of 520.25. And if it breaches the zone of 525, then from there onwards, I'm expecting a target of nearly 640 from a short to medium term time frame.
Okay, that's about KPI Green. What about Orient Tech? It saw its biggest single day gain in 3 months as well, and it was backed by heavy volumes as well. In fact, volumes were also at a 4-month high. If you track the stock, Orient Tech, what should one do?
See, overall, it was a kind of a vertical fall the counter was into. From the zone of nearly 480 towards 320, the counter was into a steep correction. So today, the kind of momentum or the kind of spurt that we have witnessed in price and volumes, the similar kind of movement we have witnessed in the month of October, where we have seen a very strong emergence, buying emergence from the zone of nearly 350, 360, and it has tested the zone of 500. So this might be a volatile counter, but it will be advisable to wait for a follow-up buying. If it happens, then one may look for buying opportunity above 410, keeping a strict stop loss of 385 from a short-term perspective.
Okay. What do you do with the likes of Hindustan Copper and Hindustan Zinc? Of course, yesterday we saw some bit of a breather, but these two stocks have also been on a tear along with the way the global prices have been moving. Are they looking overheated on the charts, both Hindustan Zinc and Hindustan Copper?
Definitely,
And if one
definitely.
holds the shares, do you think is it time to book partial profits in these two counters?
See, overall, there has been extreme overbought parameters that we can say on the technical front, on the both technical, on the daily and weekly time frame chart. But overall, the momentum is still prevailing in these counters, and one must stay with the momentum, hold their investment, because I expect till the momentum, and with the momentum, we are witnessing a decent volumes also. So there is a possibility of the momentum to continue in the counters. Although at current levels, fresh accumulation should be avoided, but for those who already hold position, they should definitely hold the position. And on technical front, there should be some trailing stop losses. For Hind Copper, the stop loss comes around the zone of 470, 475, which is the kind of today's low should be seen as the stop loss for the counter, and one must ride the momentum for the time being.
Okay, that's the view. Hindustan Copper, Hindustan Zinc. Of course, so both the stocks have been on a tear along with the kind of moves we've seen in silver prices as well as copper prices. But fertilizer stocks were also buzzing in trade. Any trade-worthy stocks within this universe?
Yes, there are various counters which were looking very positive in the day. For example, Fact was looking very positive, UPL was looking very positive. So Fact still has a very strong technical structure. It is hovering above the short term and even 200 exponential moving average. So I'm expecting that the momentum should continue in the counter. On the higher end, the next potential target is seen around the zone of 955 to 960. So that should be the immediate target from a very short term perspective, while UPL has also seen a very strong momentum. So one may even look for buying opportunity in UPL. The higher target is nearly 800 from short to medium term time frame.
Okay, those are the stocks. Fact, UPL looking attractive on the charts. But couple of stocks that I want your thoughts on are the likes of HFCL and NCC. Both these stocks will be excluded from the FNO universe from tomorrow. HFCL, I think, saw good moves earlier in the week, I think yesterday, but today, of course, it came off. How would you look at these stocks? And of course, they are exiting the FNO basket as well. So, what should the approach be here?
See, overall, there has been a strong correction in both the counters. Technically, they are below the short term and even medium term exponential moving average. So, the technical structure looks very bleak. But coming for HFCL, it has seen a historical support levels around the zone of 58, 55 kind of zone. So, I'm expecting that looking at the historical data, the support zone is placed around the zone of 55, 58 kind of zone. So, one should try to start accumulating the counter with a view of medium to long term perspective. In short term, there is no momentum, and even the technical parameters are quite disruptive as of now. But from a medium to long term perspective and looking at the historical data, it will be advisable to start accumulating, but in a staggered manner, not in a very strong or aggressive manner in HFCL. For NCC, again, this counter has given a very strong breakdown. The support zone was placed around the zone of 165 to 170, but the counter has given a breakdown. So I will rather advise to wait to recover above the zone of 170, 75. Then one may look for accumulating in NCC also.
Okay, all right, that's the view on these two stocks. But Vari Energies is another one that's in focus, especially since it will be included in FNO from tomorrow. But there's been some news flows. The CEO has exited. The stock was under pressure today as well. Any thoughts post FNO inclusion? How should one approach this one?
But technically, it is at a downtrend, so one should avoid for the time being. If there will be any kind of reversal in the counter, which will be approximately around the zone of 30,050, 3,060 odd levels, then one may look for buying opportunity in the counter. But at present, the counter is looking bleak. It is hovering around the 200 exponential moving average. So avoid for the timing. But if there will be any kind of pullback, then that could be seen as a buying opportunity for the counter.
Okay, that's the view on Vari. Not really. You should actually avoid that one for now. But another one I want to talk about is Dixon Tech, and the shares in fact are set for their worst year since 2018, and this is the first time in Dixon's trading history that the stock has delivered negative returns for 5 months in a row. Of course, we've had global brokerage CLSA that has cut its price target by 3,000 rupees from 18,800 to 15,800. It feels that the near-term outlook is cloudy and also warned of FY26 guidance cut going forward as well. Do you see more correction going forward? Do you think it hasn't really found a bottom yet at 11,850 or so? How low can it go from here?
So it is very tough to say that from here onwards where will be the next support zone for Dixon, because after a very long period the counter has underwent into a correction phase, and that too very aggressive in nature. So it will be advisable to stay sidelines from the counter. If someone is already holding the position, then 10,750 will be the advisable stop loss, because looking at the historical data, this was the zone from where the counter have started regaining some positive traction. So that should be the final stop loss in the counter. While on the higher end, one should also look for opportunity if it breaches the zone of 13,500. So if there will be any kind of pullback above the zone of 13,500, that could be seen as a buying opportunity in the counter. So for present picture, 10,750 is the stop loss, and buy above the zone of 13,500.
Okay, all right. Those are the levels to watch out for on Dixon Tech. Of course, the stock set for its worst year since 2018. But Osho, those were all the stocks that were on my radar. But two more questions for you. Firstly, just about one day to go for the year to end. Any strategies on the trading side? And secondly, for 2026, what are the top recommendations from Angel One?
Okay, so firstly, I am quite bullish on the equity markets and expecting that there might be a decent momentum coming back in the benchmark indices. For Nifty, my target is approximately, the first target is 28,250, which is the 100% momentum or price extension on the technical front, followed by 29,300. So these two are the targets for 2026 for Nifty. While on the stock specific front, the first counter which is looking very promising as of now is Samvardhan Motherson. So that is a very strong counter, and I am expecting that in the coming year it has potential to test the zone of nearly 144 to 148. So one may look for Motherson, Samvardhan Motherson to start accumulating at current levels with a stop loss of nearly 97. The other counter is IT giant TCS. TCS has witnessed a positive divergence on the weekly time frame chart. So I'm expecting that the bottom has been made. Although being a very heavyweight counter, the risk reward is comparatively low, because I am not expecting a very drastic up movement in the counter. But overall, 3,900 will be the target that one can expect with TCS.
Okay, those were all the recommendations coming in from Osho. Osho, with that, I would like to thank you for taking our time and joining in. But before I let you go, wishing you and your entire team a very, very happy new year. Look forward to more interactions and much more green on the screen in 2026.
I wish you the same, Nandita. Thank you for having me at the show, and it's always a pleasure meeting you. So I wish you and the whole production team of Money Control a very happy new year, and oh, definitely it should be green on the charts as well.
Okay, thanks a lot. Thank you. Thanks for joining in this afternoon. All right, then, just about one more session to go for 2025 to end, but there's a reminder, in terms of, the changes with respect to the derivative end of the market. In October, the NSE had announced a revision in the market lot sizes of several major index derivative contracts, with the changes scheduled to take effect after the December expiry cycle, which happens to be today. As per the circular, the lot sizes for Nifty 50, Nifty Bank, Nifty Financial Services and Nifty Mid Cap Select will be reduced. The Nifty 50 lot size will be revised from 75 to 65, Nifty Bank from 35 to 30, Nifty Financial Services from 65 to 60 and the Nifty Mid Cap Select from 140 to 120. Now, NSE also clarified that the lot size for Nifty Next 50 will remain unchanged. Now, the exchange stated that existing lot sizes will continue to apply to all weekly and monthly contracts until this December expiry, which was today's expiry. From the next cycle, The January 2026 weekly and monthly contracts will reflect the revised market lots. For weekly contracts, the last expiry with the current lot sizes was on the 23rd of December, followed by the first expiry with the revised lot size on 6th of January. Similarly, the monthly contracts will shift to the revised structure after today's expiry, with the January 27, 2026 expiry carrying the updated lot sizes. Also, there have been a few inclusions and exclusions when it comes to F&O. Swiggy, Vari Energies, and Bajaj Holdings and Premier Energies rather will be available for trading from the 31st of December. That's from tomorrow, from the next series. And there are 4 exclusions as well: HFCL, NCC, Titagar Rail, and Cyient. These are the 4 counters that will be excluded from the F&O universe. So that's an important reminder for our viewers. But another down day, but at least we were trying to break into the green, and we did manage to break in the green as well in the intraday session. Ended extremely flat, but let's see. One more day to go. If the bulls could end the year on a green note or in the positive zone, there will be nothing like it. But I'll be back with the opening bell tomorrow morning at 9 a.m. 31st December. I'll see you then. But till then, have a great evening and rest it out. We'll catch up on the markets tomorrow. Thank you for watching.